Okay, everyone, it's Tuesday, I think. Wait a minute. No, yes, Tuesday, November 27th. The days are blurring together. Let's go down to an hourly bar here. We're looking at the British pound on an hourly bar. You can see that after the move down from the high in November, the market has barely made it past the 382 retracement. We're really coming into the 50% retracement. Let me go ahead and mark that off for you. 50, there we go. So you can see it's moved up halfway from the prior move down. That's a pretty common place for the market to stop. And quite frankly, it's not looking bullish. I'm pegging the move down back down to about 9,900, right around $2. I don't think it'll go straight down, of course, but I am starting to lean more towards the bearish side, simply because the British pound really has not been able to rally like the other currency pairs. Most of the US dollar denominated pairs have been showing dollar weakness. The British pound is one that really has not. Let me go ahead and give you a quick comparison. You can see here the euro trading at all-time highs, very, very strong trend. You can see, let's go up one more. Sorry about that. My computer went wonky on me. I don't know what the heck happened there. If you do the comparisons for yourself, you notice that the pound has been lagging. That's why I'm leaning more towards the downside. But again, anytime you have a leaning in the market or an opinion about the market, that should not govern the way you trade. In other words, if I'm leaning more towards the short side, that doesn't mean I'm not going to take any trades to the long side. What that does is it helps me to gauge my expectation. You see, if I'm just focused on one side or the other, in other words, if I'm only thinking, hey, the market's got to move down here to 2,000, that's not going to leave me open to the market moving up here to maybe $2.16, which it still might. In fact, I remember, just a few weeks ago, I was talking about the market possibly moving up to $2.25, and now look at it, it's down at $2.06. So you have to remember that your market opinion has no bearing on where the market's going to go, and you can never trade as if your opinion is absolutely right. In fact, that's one of the surest ways to go broke in this business, is to pick a target, for example, down to 1.9991 or $2 to pick a price and then assume, well, the market has to go there. I've talked to many, many traders who have done that in the past and have just simply gone broke. They've run out of money before they had a chance to see if their opinion was correct. So don't fall into that trap. As we go ahead and delete this. As we're watching the market trade, it's really just falling into a trading lane here. No real pattern setting up. I'm not really looking to take any kind of trades until the market decides to make its move. One thing I will say, though, is that the range has contracted. If you look at the range from yesterday, the 26th, until right now, very, very small day. In fact, let's go up to the daily and take a look at that. If you look at the range here, you've got a very small range from high to low. Fairly long range here, but you can see here, big range, small range, big range. What I'm getting to here is I would expect tomorrow to be a fairly big range. So what that should do for you is expect the breakouts. Expect the market to continue down or continue up. Don't expect things to fall short if you get a small range day. That's the key here. But like I said, the market's really kind of iffy, pretty wishy-washy as far as I'm concerned, because there isn't a solid market pattern. So again, keep your powder dry. Watch for the market to trade down here towards the bottom end of the trading lane, trade up here towards the top end. In fact, let me redo these. Okay, that's a little bit better look on the trading lane based on the daily view here. Support coming in about 638, 2.0638. Resistance all the way up here, 2.851, 2.0638. Resistance up here, 2.0851. So you can see support is starting to rise. The market is definitely in a short-term uptrend, but keep in mind, we're in the context of this a little bit longer short-term downtrend. Anyway, just keep in mind the momentum right now is down. The market was not able to stick anywhere near this 50% retracement level. So my inclination or my leaning would be going long here above the 2.0755 level, expecting a continued move to the downside, but then not looking to go short until the market can clear this area of support down here around 20638.